Welcome back to the channel. A lot to unpack, a lot to talk about this week, or maybe not that much to talk about, especially with the Bank of Canada hitting the pause button for the third consecutive time now. Ultimately, this leaves a lot of Canadians wondering what is next for the Bank of Canada. Speaking of what's next, the Bank of Canada is going to be meeting next on September 17th, and hopefully we'll see the Bank of Canada and the data rolling out prior to that meeting move the needle for the Bank of Canada, but maybe we won't expect too much. But more important, this week, I want to talk a little bit about what happened, or our thoughts and opinions on the press conference, and more importantly, a particular situation that happened with one of our clients, actually their kids, and how we're sort of going through this process and things that you need to pay attention to, whether you're looking to buy for the first time or you own a home and you're looking to sell. Ultimately, a lot of things that you need to be paying attention to. We'll talk about that and more this week. Once again, thanks for stopping by. If you have not subscribed to the channel, we invite you to subscribe, hit that notification bell so you can stay up to date with everything that's happening, especially with all the Bank of Canada news. And more importantly, if you have learned something in this video, like and share the video. But more importantly, I love to hear from each and every one of you. Please make sure to comment your thoughts, concerns in the comment section below. Let's get right into it. Ultimately, as we opened up with the Bank of Canada, really not making headlines. We expected the Bank of Canada to hold at 2.75. Ultimately, that is what some will call the neutral range for the Bank of Canada. But ultimately, when will those cuts happen? Some may say, hey, September might be another opportunity. We'll see exactly how the data rolls out. But as we opened up with, a lot of the data that pointed to the Bank of Canada pausing. And the reason why is ultimately inflation ticking up, core medium trim in a territory where the Bank of Canada doesn't like it. They have the cover to sit down and wait a little bit longer. More importantly, obviously, we got a lot more of these part-time jobs that sort of came out. But the bigger picture is what's happening with these potential tariff impacted sectors, right? What's happening with the automotive sector? Not looking too good. I mean, ultimately, these are things that we have to pay close attention to. And what we're gathering is the Bank of Canada believes that the Canadian economy is in a manageable state right now. Obviously, if the Bank of Canada sees unemployment continue to tick up and the alarm bells go off, that's when they'll make the move. And the question is by the time they see that, is it too late? And ultimately, the question is the Bank of Canada, the governor, would rather be late to the party than basically make a move that they're going to be criticized for. They're always late to the party, right? That's expected from central banks, and that's sort of the consensus. Something we've conveyed on the channel before. The Bank of Canada doesn't want to be the first to set in motion, even though they did a while back. They were the first to move the rates ahead of the U.S., and ultimately that has a lot to do with the state of the Canadian economy and obviously what is happening in the U.S. So right now, a lot of tensions between Jerome Powell and the President Trump. We are seeing a little bit of those tensions actually play out here in Canada with the Doug Ford, the Premier of Ontario, sort of criticizing the governor of the Bank of Canada for not cutting rates and sort of wanting rates to be cut. But once again, these technically should be two separate entities with no political ties. At the end of the day, we'll see exactly what happens there. But as I said, next meeting, September 17th, coming up. What will the Bank of Canada do? Let us know your thoughts in the comments section below. Now, moving forward, just wanted to share this very interesting story that we had with a client that approached us last week. We sort of finalized all the documentation this week, went through the final review, and I'll give you sort of the backstory, obviously keeping everything confidential. One of our clients had reached out to us who were in a situation right now where they were told that they would be able to qualify for a home. They were going to sell their condo. Obviously, the condo was located in Toronto. Probably a very similar story right now to many Canadians who are maybe having a family looking to get more space. Long and short of it is that the realtor put them in touch with a rep at that financial institution where he has a relationship. That person really had just told him, hey, yeah, no problem. Give me this, this, and that. Didn't pull a credit check, went through the documentation, found out some inconsistencies with the way even they were looking at the income. And we confirmed this, obviously. So not only did I previously work for this institution, ultimately we went through a lot of the channels to figure out, hey, why is there a discrepancy here in the income? And ultimately we figured out that if you look at the income, it has to be on an hourly basis, a 2-year average. And based on the fact that the income itself pay stubs didn't annualize to more for the current year of 2025. Previous year was lower than the year prior to that because you hadn't worked that many hours. So ultimately, the income derivative that we were able to use was much lower than what they may have used to qualify. So that would have been number one, a red flag once the file would have gone down to the review office or the mortgage officers to understand it. And then obviously that's something that's super important because of the specificity of where that work was and what type of work the person did. On top of all that, the individuals didn't have much of a reserve fund. Going through all the information, did the parents have the ability to gift? The answer was no. So, you're sort of isolating those particular scenarios, saying, hey, so there's no additional backup. What are the exit strategies? It's like, playing a hand of poker, how many outs do you have? So we went through all that information. We said, okay, so now we're looking at the sale of your property. The sale of this unit, which is actually currently listed at the moment when we started talking to them, started off at a certain price and then slowly was being reduced based on the GTA condo market and the lackluster, sales that are happening right now in GTA condos. So obviously environment, the market conditions right now, I should say, are not conducive of them selling that for top dollar. They have to be competitive because there's tons and tons of units for sale right now. So, we were running the math based on that particular unit selling for significantly less. And we're looking at that money saying, okay, well, if you sold for this, by the time you pay the commissions on the unit, by the time you look at all the costs to pay out the mortgage, you would be required to pay off some of the debts that are listed that they currently have in order to make the numbers work. You're not left with enough money to put 20% down on the home that you're looking at that particular price point. And the reason behind that is because you can buy with less than 20% down, right? They still can qualify not as a first-time home buyer, but they can still buy insured. First-time home buyers have the ability, if they've never purchased a home, they fall under the criteria that they can take a 30-year amortization. But now that they've owned the home together, both of them are not considered first-time home buyers. The maximum amortization they could have taken was 25 years. And by the time you start plugging in those numbers, even at the lower rates, and the fact that they don't have that 20% ultimately leaves them in a position where they would have not been able to qualify if they would have sold that home. They would have sold, if that condo would have been sold, they would have basically been displaced from home and potentially forced to rent, all because I think the realtor wanted to try to make a sale on the unit. The person at the bank really didn't give the time and effort to really go through all of them and build out the scenario, say, if this, then that, right? And say, if it sold for this, this, and this, how much is left over? Do the math. And then on top of all that, where were they going to come up with the money for the land transfer tax for the property that was located in Toronto that had two, a municipal and a provincial land transfer tax calculation? Because they're not first-time home buyers, there's no actual discount there. So all these things led the clients to really appreciate the fact that, hey, we were able to look at them. They didn't make a decision. And the fact that the market was slow allowed them to sort of stay back and take that place off the market now and continue on building and saving for that next home. So I find that this is maybe a scenario that some other people may have gone through. They were ill-advised. They didn't get that second opinion. They didn't talk to a mortgage professional, actually took the time to go through that for them and make sure that the possibility is there, not just on a verbal. Like obviously we gave them the certificates for pre-approvals for what they could qualify for based on them. And that wasn't enough for what they wanted to do. At the end of the day, the spread between what they would have sold for, what they could have bought for was like $100,000. They wouldn't have been able to get out of that particular condo and move into something more affordable unless they decided that they were going to move a little bit further northeast, southwest of where they are right now. And unfortunately, at this time, that wasn't going to work based on their search situation. So if you're finding yourself in that situation, someone who might be in that situation and they could use some extra advice, feel free to share this video with them. Helps get that content out to them, and as well as maybe gives them some information to consider. But at the end of the day, let us know your thoughts and opinions in the comments section below. If you have any questions, always feel free to reach out to our team here at InTouch Mortgage Solutions. Make sure to subscribe to the channel. We'll see you all next week.